The crypto market just printed a pattern we haven't seen since right before the last major bull run. Pause. And while everyone's doom scrolling Twitter looking for the next hot take, one institutional analyst just released an outlook that contradicts almost everything retail investors believe right now. His name is Matteo Greco. He manages digital asset strategy for Fineqia International, a publicly traded investment company. And what he's seeing in the data should change how you think about the next 6 months. Stick with me for the next 7 minutes, and I'll break down exactly what Greco's analysis reveals, why Bitcoin dominance is lying to you, and the specific catalyst most people are completely ignoring. Let's get into it. First, you need to understand who's actually talking here. Matteo Greco isn't some anonymous crypto bro with a Lamborghini rental and a ring light. He's the digital asset analyst at Fineqia International, a company that's publicly traded, meaning every claim they make faces regulatory scrutiny. When Greco releases a market outlook, institutional money pays attention. Pause, and his latest analysis just dropped. Now here's where it gets interesting. Greco's been tracking something most retail investors completely miss: the disconnect between price action and underlying market structure. See, everyone focuses on whether Bitcoin is up or down this week. That's noise. What matters is capital flow architecture, where money is actually moving beneath the surface. And right now, the architecture is shifting. Stop for a second. If you've been waiting for someone to tell you exactly when to buy or sell, that's not what this is. What I'm giving you is the same framework institutional analysts use to make decisions. The goal isn't prediction, it's positioning. Big difference. Let's talk Bitcoin dominance, because Greco's take here is contrarian. Pause. Most people see Bitcoin dominance rising and think it means altcoins are dead. That's a surface level read. What Greco points out is that dominant cycles have a rhythm, and we're potentially approaching a rotation point. When Bitcoin dominance peaks, historically, capital rotates into large cap altcoins first, then mid caps. Then, if the cycle extends, into small caps. But here's the catch: that rotation only happens under specific conditions. You need sustained risk appetite, you need the Fed stepping back, not leaning in, and you need narrative catalysts that pull capital down the risk curve. Right now, 2 out of 3 boxes are checked. The third one is where Greco's outlook gets really interesting: the Fed factor. Pause. This is the variable most crypto analysts get completely wrong. They treat Fed policy as binary: rates up bad, rates down good. Greco's framework is more nuanced. What matters isn't just the direction of rates, it's the velocity of change, and more importantly, the narrative around that change. When the Fed signals it's done hiking, markets don't wait for cuts. They front run risk assets, including crypto, start pricing in easier conditions before they materialize. Greco's analysis suggests we're entering exactly that window, not because rates are dropping tomorrow, but because the language is shifting. And in markets, language moves capital before policy does. This is why you can't just watch the charts. You have to watch the words. Now here's your pattern interrupt. Pause. I want you to ask yourself a question. When's the last time you actually changed your investment thesis based on new information? Not confirmed what you already believed, actually changed your mind. Because what separates winning investors from everyone else isn't prediction accuracy, it's update speed. How fast can you integrate new data and adjust? Greco's outlook isn't about being right, it's about being responsive, and that's the real edge. So what comes next? Here's what Greco's analysis points toward. First, watch Bitcoin's interaction with key psychological levels, not because technical analysis is magic, but because enough capital believes in those levels that they become self-fulfilling. The $100K level isn't just a number, it's a consensus trigger. Second, monitor ETF flows. Since spot Bitcoin ETFs launched, they've become the clearest signal of institutional appetite. When inflows accelerate, that's not retail buying, that's pension funds, endowments, and wealth managers adding allocation. Greco emphasizes this metric because it's harder to fake than on-chain data. Third, and this is the one most people sleep on, watch stablecoin market cap. Pause. When stablecoin supply expands, it means dry powder is entering the ecosystem. That capital is sitting on the sidelines, waiting to deploy. It's the leading indicator of moves that haven't happened yet. Greco's framework connects these three signals into a coherent thesis, and right now, all three are flashing something most retail investors aren't seeing. So here's your action plan. Don't make a single trade based on this video. That's not the point. Instead, add these three metrics to your watch list. Check them weekly. And when they converge, when Bitcoin holds key levels, ETF flows accelerate, and stablecoin supply expands, that's when you revisit your positioning. This is how institutional analysts operate. Not on hype, on framework. If this breakdown actually helped you think differently about crypto, subscribe. I drop videos like this every week breaking down what the smart money is doing while everyone else chases headlines. Hit the bell so you don't miss the next one. And if you want me to go deeper on any of Greco's specific points, drop a comment. I read them. See you in the next one.